Alright, y'all, so what I'm going to do is I'm going to go over the trade that I took yesterday. So I took it around 5:30, 6:30-ish p.m. yesterday, which was Sunday, September 7th, I believe, yes. And today is September 8th. It is currently 3:15 p.m., but the trade closed at about, I'd say, 4 a.m. this morning, 4:30 a.m. this morning. And so I'm going to go ahead and show y'all why I got into the trade, how it played out, and how it took profit. So let's get into it. This is UJ's trade on September 7th. Okay, so this is UJ on the hour time frame, and this is where the market closed Friday at 5 p.m. And this is where the market opened Sunday at 5 p.m. So right here, we had this massive gap. So I measured the how much pips, right, that it literally jumped. And I'm gonna just go to how high it went, right? So in total, it moved about 76 pips from where it entered, from where it closed, to where, the highest point of that candle that it went to. And so when I saw that this happened, I was like, okay, so there's going to be an automatic coverage of the gap. One thing I know about UJ, studying UJ and trading it for over a year and a half now in total, maybe not consecutively, but in total, I know that for a fact, UJ will always trade or make up the gaps within the exact same trading day. It's never really been outside of the trading day or a couple days or weeks to cover a gap with UJ. So I know that at some point it was going to take place. Now, it may not have happened right away, but I knew for a fact that it was. Now, one thing I also took heed of was that not only was that measurement there, we had some lower highs happening here, right? So let me go here. I can show you one here, right? Lower high, a lower high, right? And another lower high. Now, this hadn't happened already. So this is how I knew, okay, at some point this was going to happen because of what I see on the 4 hour. Let me show you. If we zoom out, we can see the bigger picture, right? Even if you go to the daily, there was really no need to go on the daily because of the time frame that the market had made that gap technically on. So let's go back to the 4 hour. You can see it better on the 4 hour because technically even on the daily you can't see the gap. But yes, you see here we had our higher highs, right? The market dropped. It started to consolidate some in a zone, but it was still giving us slight higher highs, right, into this triangle that we see here. Now, we're still waiting for the move because I truly believe that it might go up outside of this triangle. I don't know. Possibly. That's just me. Only because of what I know and what I've studied. But granted, anything is possible in this market. So we have here, right, our lower highs, that we just circled, right? But these two were the only two available to see before this one even took place. And this is where the gap happened, right? So I'm on my 4 hour, I see the gap, I'm like, okay. At that time, I checked every time frame, right? I checked our 30-minute. So the market opened, it was here. I saw this happening. I said, okay, great. I can get in, right? I technically got in. I'm going to show you guys, right? If we see this, you're going to say, okay, automatic, I'm going to get in. I didn't want to miss it, so I automatically got in. Excuse me. I automatically got in, and I knew what I was possibly risking with it going up to this super strong support and resistance zone, this 4 hour resistance zone. This is where the market has bounced off of several times. And so I was like, okay, the highest it might possibly go is this zone or the top of this triangle. Was I willing to risk that? Unfortunately, yes, I was willing to sit in that drawdown because I knew for a fact USD JPY was going to cover this gap. However, I also knew that it was giving us lower highs. So I was not too worried about it going all the way up to the 4-hour or the triangle. But that's just me. Now, if it did, I would have closed out on my stop loss, but I didn't. So this is exactly what I did. I took a look at every time frame. Let's even go down to the 15-minute. I was like, okay, great. The only issue I had was my moving averages were showing me that we were in an uptrend, which we were, right? We were in an uptrend, right? My blue crossed over my red, and that was a part of like one of my confluences with trading is my moving averages. So then I went to my 4-hour, and I was like, well, not necessarily, because on my 4-hour, even with this gap, we were still in a downtrend, which is a stronger time frame, which is giving me more confirmation that, okay, it could switch, but because I know there is a gap that needs to be filled, this is more likely to be the stronger trend right now, including our lower lows. So I took the chance based on what I know in previous moves in the market. And I said, okay, you know what? Just take the trade, see what happens. If it hits that loss, it hits that loss. If it doesn't, it doesn't. So we got in about here. I'm going to show you guys exactly what I did. I got in about here, right? And I took a short, all the way to the top of that zone. And this is exactly what happened. This spiked and hit my stop loss, but I did not close out of the trade. I just knew, I was like, it's going to go down. It's going to go down. I would never recommend this to anybody, but understanding everything that I'm seeing on every time frame, I'm like, okay, it's going to go down. And my stronger time frames had way more confirmation than anything. And so, see, you can't really see the gap on the daily. But anyways, if I go back to my 4-hour, right, we see our gap. We're still in a downtrend. Our moving averages did not even touch. This is what gave me my go ahead to really get in, because if these moving averages even came together a little bit, let me show you guys what I mean. By like, if they were touching even like this, or, like this, or like this, then I would have questioned it. Then I probably wouldn't have gotten in at all. But they're so far apart, even in the midst of the gap. I was like, okay, we're still in a strong downtrend. So I got in, like I said, 30-minute, took the trade. We hit stop loss, but I did not get out, because I also knew that it had to create another lower low for it to continue to sell, right? We had to create another lower high, another lower high. So we sat in it. We sat in it, did we? And literally sat in it, and we took profit, right? Actually, we smashed profit, because on our top tier challenge account, we have a $10,000 account, but right now it's on phase 2, and we have to make $1,000. And right now we are about 200 and something dollars shy of $1,000. And we just got the account last Thursday, and we took our first trade on it last week, and we got like $80 something after losing we took our first trade on it, and we lost about $100. Then took another trade and got about $80 something, and then took the trade we took yesterday afternoon, whatever, and we got 700 and change. So right now we're about 200 and something shy of $1,000 for that, and then I think we get the challenge account, and then on our live account, our own personal capital, we got $400, and so. Kalaki, I'll actually stitch them in right here, but yeah, y'all, this is just how I simply looked at that specific move. That's not how I look at every move, but you have to adapt your analysis to every time frame. You have to adapt your analysis to wherever the market is right now. You have to adapt your analysis to what's currently happening and understanding the pair that you trade. And that's why I don't think it's healthy to trade 400 or 500 different pairs. I think personally that if you really take another, like a pair or two, maybe even three, that you really are willing to understand and study and truly see how it moves. Like if I didn't know this pair, I probably wouldn't have taken that trade. But because I know UJ for a fact, and I'm not saying I'm the master at UJ, but at the same time, excuse me, I am very comfortable trading UJ. And so we have to also realize, like, your strategy will always be, how do I say that, tweaked every time you get in the markets, because you don't know what conditions the markets will be in. Now, I would never say stray away from your plan. Absolutely not. Like that was technically I had two entries on that trade. So what I did was I had an entry, this entry here, and then I had another entry about here at the bottom of this specific candle. That first entry candle when the market opened, I put at the bottom of that candle is where my second entry was, and my first entry was here. Took both of those entries to the very bottom, and like I said, secured 700 plus and 400 plus on both on the accounts. And so you have to, like I said, be willing to tweak things just a little bit to really be able to secure your profits and really get you some skin in the game. And so it's not every time everything is going to be exactly perfect. Yes, there is a such thing as an A+ setup, but sometimes also understanding the bigger picture. Now, if I hadn't zoomed out and saw the bigger time frames and seen what was going on, I would have never taken those trades. To seeing how my moving averages were not aligned, were aligned, I still took my analysis and I still looked for my confluences. I may not had all 4 or 5, but I had 3, and that was enough for me to truly get in and take my position. And so that's what we did, and we made profit. Y'all get some skin in the game.